For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by Nate Kreinbrink, financial planner at NelsonCorp Wealth Management. Well, welcome back, Nate.
Thanks again for having me again.
So the dollar had a strong rally late last year, but now it's pulling back. What's happening?
Well, that's true. The U.S. dollar had a strong finish to close out last year. However, as we've gotten more into 2025, it has started to show some signs of weakness. Now, this shift is especially interesting as concerns of the tariffs, trade wars, possibly triggering a global recession have began to grow. Now, the U.S. dollar tends to rise in cases like this, as history has shown that when the markets become nervous, investors rush to the dollar for safety. You can see there towards the left in the red that that's exactly what we saw in 2008 during the financial crisis. We saw it again in 2020 when the pandemic hit, and then even late last year when global uncertainty was rising. However, today, instead of another surge, we're seeing the dollar peaked in January right as bond yields typed out, and it has been declining since then. Now, that's a big clue, because if investors truly believe that a global downturn was coming, we'd expect the dollar to be rallying, not necessarily pulling back. So while uncertainty still exists in the markets, the widespread fear that typically drives a flight to safety is kind of missing.
Okay, so does this present any new risk for investors?
Well, it can. I mean, a declining dollar makes U.S. assets less attractive to foreign investors, essentially putting additional pressure on the financial markets. Additionally, this could lead to, from a portfolio standpoint, some opportunities with some international type investments. However, at the end of the day, we primarily view this recent weakening in the dollar as a positive sign that a global recession is less likely, as investor confidence remains intact.
All right, Nate, thanks for your insight today.